This is Horizon's Middle East and Africa. Our top stories this morning. At least 35 Palestinians reported killed in an Israeli airstrike at a camp for displaced people in Rafah. That's despite the ICJ ruling ordering Israel to halt operations. South African President Cyril Ramaphosa urges citizens to vote as the nation gears up for its most hotly contested election in 3 decades. We're live in Cape Town for the latest. Plus, G7 finance chiefs blast China's trade practices and threaten tougher protections for their economies and critical industries. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. As ever, let's get you caught up on how these markets are trading this morning. A better close for Wall Street on Friday with the Nasdaq up more than 1%, the S&P up about 1%. You can see that there is a bit of life coming back into Asia-Pacific. The Asia-Pacific MSCI index up 0.5%, coming off its worst week in a couple of months last week. So some green on the board there. S&P futures trading sideways, down about 9 basis points. Bear in mind, today is a bank holiday in both the UK and the US, so that's going to limit some of the volumes that are going through in these markets. Brent also in focus, trading slightly higher. Again, still down 7% on the month, but the next event that we're watching out for in the calendar is that OPEC Plus meeting. Found out on Friday it's moving to a virtual meeting, so that's going to happen next Sunday. No change is expected in production, but what we are seeing is a bit of support coming through on the downside. And then dollar yen also in focus. The yen is trading slightly firmer versus the USD to the tune of 0.2%. Our terminal chart today, just want to flag something that I think is quite interesting and happening with markets. And despite all of the geopolitical tensions, despite the many conversations that we've had about central banks and what they're going to do, the cutting cycle, this is the picture for cross-asset volatility. You can see the VIX, the white index, is 11.9, going almost back to the all-time lows that we reached around 2017. So that's interesting to note. But it's not just the equity indices. We're also seeing it as well in FX vol and rates vol too. All right, let's check in also on how markets in Asia are faring. Avril Hong is in our Singapore studio in Asia. And Avril, what is on your calendar this morning?
Yeah, Jumana, I guess to your point about the vols cross assets there, something we're seeing in the Asia Pacific is that green coming through after the numbers last Friday showing US consumer inflation expectations paring back. Suddenly, there is risk appetite again. The TAIEX is leading gains, more muted on the other benchmarks across the region. Wanted to talk about what we saw on dollar yen as well. As you say, it was that recovery and pulling away from the 157 plus level, I think, is a sense that we might not see that much risk of intervention. Let's flip the board, because on a week where we are watching out for data and the Fed's preferred gauge of inflation, flip the board please, we are also keeping an eye on what's come out of China. Today we saw industrial profits that rose, and that points to some recovery in the Asian giant after exports return to growth. Domestic demand also improved. We're seeing the offshore yuan moving a bit stronger against the greenback today, Jumana.
Those AWIDA comments certainly driving some of the market price action this morning. Avril Hong in Singapore, thank you as ever. Now, at least 35 Palestinians have been reported killed in an Israeli airstrike at a camp for displaced people in Rafah in southern Gaza. The strike came 2 days after the ICJ issued a ruling ordering Israel to halt its operations to spare civilians. For more, let's bring in managing editor for the Middle East and North Africa, Honor Ant. And Honor, there has been an intensification on both sides once more over the weekend. We know that Hamas reportedly fired rockets into Tel Aviv. Those were intercepted. And then late yesterday evening, we also saw retaliation from Israel into Rafah once more. What do we know about these strikes?
As you said, Jumana, dozens of Palestinians were killed in the airstrikes by the Israeli Air Force in Rafah on Sunday night. That airstrike came just hours after what was reportedly a Hamas rocket attack into Tel Aviv. As you said, all of the rockets were intercepted by Israel's air defenses. But I think the really interesting or the really important thing about what happened yesterday is the fact that these events, these airstrikes, came just 2 days after a court ruling by the International Court of Justice in The Hague on Friday, when the High Tribunal basically said that Israel should halt all military and other activities in Rafah that it said risked destruction of Palestinian people, either in whole or in part. And I think what happened yesterday sort of highlighted the diverging interpretations of the Friday court ruling by those in Israel and elsewhere that were very much on display throughout the weekend.
Yeah, Honor, I'm actually going to read that sentence that you just brought up. Israel must immediately halt its military offensive. This is per the ICJ, and any other action in the Rafah governorate which may inflict on the Palestinian group in Gaza conditions of life that could bring about its physical destruction in whole or in part. The reason I'm reading out this statement is, to your point, there has been many interpretations as to what that means exactly. Some people interpret it as ICJ telling Israel to completely stop military operations. Others are saying that it can engage in targeted strikes so long as it's not going to lead to a big impact on the civilian population. Is that the justification that Israel are using?
Yes, exactly. So, as you said, many people around the world simply took the ICJ court ruling on Friday as a way of telling Israel to halt its operations in Rafah. Whereas in Israel, many believe that, well, the interpretation for many was quite significantly different, including the National Security Advisor, Tsachi Hanebi, who on Friday said that what the court told Israel basically was that it should not commit a genocide in Gaza. And Hanebi also said that Israel did not commit a genocide in Gaza and will not commit a genocide in Gaza. And the fact remains that for Israel, Rafah and the Hamas battalions in Rafah are a legitimate target. Since the beginning of the war, Israel has been saying that it will not cease operations until Hamas is eliminated completely. And that recently they've been saying that in Rafah, there are about 4 active Hamas battalions, which they will go after no matter what. And the ICJ court ruling is no reason to stop, because the ICJ court ruling is simply not about telling Israel to stop unconditionally, but on the condition that it should be sparing civilians, which Israel says is exactly what it's doing.
Yeah. Bloomberg's Honor Ann, thank you so much for giving us the latest on what is happening in the Middle East. Well, China, Japan and South Korea are seeking to revitalize cooperation on security and economic matters at their first formal three-way summit since 2019. The Chinese Premier Li Qiang has asked the two nations to work with Beijing on keeping supply chains stable. For more, let's bring in China correspondent Minmin Lau. Well, we talked about a preview of the summit on Friday. What exactly have we got out of it? It was significant to begin with, given the fact that this was the first time the three leaders were meeting in several years.
Yeah, we've seen fresh lines coming up this morning. Premier Li said to be urging Korea and Japan to maintain strategic autonomy and to uphold the multipolar world, avoiding camp politics. Now, this is really China's way of telling Korea and Japan not to align with the U.S. when it comes to foreign and trade policies. This is a time when Washington has been pushing Korea and Japan to get on board by imposing limits on chip-making equipment exports to China. We know Japan already imposed some curbs last year. It's been trying to push back against further pressure to expand those curbs. And it looks like this trip, there's been some positive outcomes so far. President Yoon saying that the three have agreed to maintain a safe and stable supply chain and a transparent trade and investment environment. Now, the three countries have also agreed to resume talks for a free trade agreement that's been put on hold since 2019. So it looks like, at least the three sides have come together to try to seek common ground, at least on the trade front. And we know a lot is at stake for Korea and Japan because China still remains their largest trading partner right now.
And Minmin, I thought it was interesting to note that the Premier had a series of bilateral meetings as well with the Korean and Japanese leaders on the sidelines. It seems like he's taken quite different approaches with these two separate countries. Tell us more.
That's right. So in his meeting with Korea, the talks were dominated by China's call for this stable supply chain. And in a signal of how important that is, we see Premier Li also meeting with the boss of Samsung. Samsung, of course, is that front runner when it comes to chip processing in the region. Premier Li saying to the Samsung boss that, China is a mega market. It welcomes foreign investment. It will create a favorable environment for foreign companies. But when it comes to Japan, however, Premier Li had taken on a much more pointed tone. It called on Japan to fulfill its obligations and responsibility when it comes to the dumping of those treated nuclear wastewater into the ocean. Now, if you recall, several months back, China was very angered by this. It had imposed a seafood ban on Japan as a result. And it doesn't look like there is any breakthrough on this, because the Japanese Prime Minister Fumio Kishida had also called on China to lift that ban, and it doesn't look like either side wants to take a step back on this. China also called on Japan to properly handle its historical problems as well as the Taiwan issue. And we know Japan kind of sees its own fate as being very closely intertwined with Taiwan, because when China conducts these war games, some of its missiles have in the past fallen into the Japanese exclusive economic zone. So that's a concern that Japan has, that is kind of casting a shadow over these free trade agreement talks, because Japan is pushing hard for China to, to stop these preferential treatments for state-owned enterprises and subsidies as well that is distorting the playing field for foreign companies.
And from that perspective, it makes it easier to understand why those bilateral talks are actually taking place. Bloomberg's Min Lau, thank you so much for giving us the latest. Well, still ahead, the French Finance Minister Bruno Le Maire says the entire world economy is at risk from a glut of cheap Chinese exports. Our exclusive interview coming up. But next, hear why our capital management calls the onshore yuan the biggest disappointment in FX markets this year. This is Bloomberg.
What did we really right over the last 2 years is that we really followed the meeting to meeting here understanding, and I believe that should still be the case. So if there's a rate cut in June, we have to wait, and I believe we have to wait till maybe September, I think July. But as I said, it is too early to speculate.
Bundesbank President Joachim Nagel on the ECB's rate policy. Let's bring in Saed Abukarsh, our Capital Management Senior Executive Officer. Good morning to you, Saed. Perhaps a good place to start would be with the Nagel commentary that's come through overnight. I mean, no surprise, he is known to be one of the more hawkish members of the ECB, and he's saying we need to wait until September to cut. The market is 21 basis points priced in for June. Is your expectation that the ECB go in June?
Look, it's not a surprise that Germany would actually be more hawkish, given basically their historical inflation stance. I think what we're into right now in terms of the stage is basically every central bank wants to be assured the next step is the right step. It isn't a situation where they want to go full blast and cut. There's nothing really pressing them to actually go the reverse way in terms of how they've hiked over the past few months or the past few quarters. The position right now, I think, is more about wait and see. Let's see the data prints. Let's actually have a compelling case. And I think Germany will always have the same position in relative terms of inflation. Obviously, inflation is softening, but not at a pace that actually mandates an immediate response.
Yeah, I mean, their case is a bit different because the economy is so weak from a growth perspective. But, one of the themes that has come up the last couple of months is one of central bank divergence. And it appears as though more and more central banks are willing to just get going with their rate cutting cycle and are no longer willing to wait for the Fed. That is interesting, but how does that also create opportunities in this
Well,
space?
here we are again, and basically looking at the situation where we do have different paradigms. We have the U.S. paradigm, we have the European paradigm, we have the Asian paradigm. Obviously, we saw Japan exit zero or negative rates in terms of pushing us back over the zero line. We're looking basically at a situation where you have different concerns. One, in Europe, obviously, the war in Ukraine actually created quite a bit of stress in terms of the overall economic picture. On the other side, the U.S., actually, they've been surprised. The Fed, by no measure, has been surprised. I mean, they've backtracked on a few points of view. So you do see divergence. But the main theme, I think, is looking at global central banks is where is the best next play? So I think right now we have a division, yes. Obviously, we can see one cut from the Bank of England, one cut from the ECB this year. One cut was not priced into the Fed. Actually, it was 2 or 3 cuts when we began the year. Right now, we're hoping for one cut, if not even a hike, if the data comes in more aggressive. It isn't just one print we're looking at. We're looking at 3, 4 prints before actually we see the Fed act. So I think what we're seeing now is the beginning of a divergence, as you said again. and the ECB will probably will act before the Fed. The Fed won't act until we see a bit more color. So that gives us a bit more time in terms of equity markets. In terms of the U.S., we're still seeing quite a bit of push in U.S. equity markets because the paradigm has shifted. We're no longer looking at financials, or we're looking at an AI paradigm, where basically everything which has a beta to AI is actually rallying and carrying us through. So and that basically is the biggest market right now is the U.S.
Yeah. I mean, so ultimately what's happening is that the AI hype is driving this market higher and less so about Fed rate cut expectations. On Fed rate cuts, how likely is it that they perhaps decide to change what they're planning on doing depending on the timing going into the U.S. elections? Is that going to influence how the Fed decides on cutting rates?
That's really the key maker here is will Powell bend into elections if the data actually is poor? The data right now, he has two key points really, right? He has unemployment and inflation. Inflation is moving as fast as it'd like to do. The consumer is definitely slowing down. Unemployment is not rising at a level which is alarming at this stage. So there is really no impetus, catalyst for the Fed to actually act a bit more aggressively. And in fact, their expectations were probably a bit more aggressive in terms of cutting due to concerns about unemployment or inflation dropping. So I think we're more likely to see the Fed stand back, watch two more prints before they actually commit once again. They made the mistake early on in 2024 where they have given forward guidance. I think they're more likely to be a bit more conservative because what we're seeing again is market forward guidance. The market expects cuts, so now we're stuck in this phase where the market is looking at forward guidance. Now we've shifted it to, well, let's hold on for a bit longer until we see a bit more convincing data. So the forward guidance function now is a bit shifting back and forth. It's not as important as it was before, but the market is still buying into that forward guidance.
So I was looking at a chart earlier on the show today and wearing an old hat that you used to wear a long time ago, back when you were on the sales side. Cross-asset volatility, it just seems to be dropping and dropping and dropping. We talk about the VIX, interest rate volatility, FX volatility. Why is that the case? Why are implied options trading at such low volatility levels?
So let's just step back for a second. We've had two geopolitical events over the past 2 years of significance. We have Middle East, we've had Ukraine and Russia. There is really, we're coming out of COVID, right, over the past 4 years. We haven't had events affect us in the way that we thought they would affect us. And primarily, vol is bought when you have expectations of a paradigm shift. Right now, we see nothing in the short term. You have this amazing rally in equities driven by AI or technology. Market has not responded to rate hikes in the way we thought they would respond. Discounting hasn't really been the key driver. What we're looking basically at right now is a trend. A continuous trend of buying assets because money is cheap. Liquidity in the market is immense. Despite rates being where they are, the amount of liquidity with the financials is tremendous. Allocation is tremendous. People have left to allocate a tremendous amount of assets. So what we're seeing is a step back, especially given the summer month we're going into, plus the election cycle coming on. There's really not many people taking a swing at a change in the overall trend.
Yeah. That liquidity point is also interesting as well because you would have thought in a higher interest rate environment, tightening of financial conditions would have occurred. Hasn't actually occurred. So the central banks must be asking themselves, why not? A conversation to continue in the future. Saed, thank you so much for coming on. Saed Abukarsh, ARC Capital Management Senior Executive Officer. Thank you. Also coming up on our show, French Finance Minister Bruno Le Maire shares his thoughts on how cheap Chinese exports could damage the global economy. Our exclusive interview is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, concerns over a two-speed global economy skewed by U.S. strength and European weakness were a hot topic at the G7 meetings in Italy. OECD Secretary General Matthias Cormann told us more about the growing challenges.
Many of the debt issuance will have to be refinanced and refinanced at higher rates, and the challenges here are obvious. And so what we've been warning of is that there is a real need to rebuild fiscal resilience and to have credible medium-term strategies in place to address the debt challenge.
And when you look at the sort of the list of risks across the world, right, whether it's inflation, growth, geopolitical, what really worries you the most right now?
Well, look, I mean, the key risks that we're focusing on, obviously, there's a risk still that inflation proves to be more sticky than anticipated, but conversely, there's also the risk that monetary policy measures will overshoot and that we end up with having too hard an impact, and that is something that remains challenging to balance moving forward. But then the geopolitical risk is the very significant risk, because I mean it's sort of very hard to see how you can take effective action depending on where you are in the world, but you are on the receiving end of potentially very significant economic and social implications, of course. I mean, depending on what happens in the Middle East, we could see another supply shock. We could see another supply shock causing an inflationary increase, and so I mean there are of course things that are not immediately under the direct control of countries in other parts of the world.
Okay. Well, that was the OECD Secretary General Matthias Cormann speaking with our colleague Oliver Crook. We will be speaking to Oliver later on in the show as well. But this is going to be a mega week. Don't be fooled by the fact that today is a bank holiday in the US and UK, so markets are closed. That might impact some of the volumes trading in the market. But later on this week, we are watching out for the EU foreign ministers meeting that actually starts today, but tomorrow we'll start getting some of the outlines of that meeting that's taking place. Wednesday, the beginning of South African elections. My colleague Jennifer Zabazaj is on the ground, and you'll be seeing our coverage throughout the week of these elections. Fed Beige Book, obviously interesting one to watch as well, given the recent commentary that we've had out of the Fed. Many of those policymakers actually leaning towards more hawkish commentary in the last couple of weeks, suggesting that they may be inclined to be a bit more cautious about the path of rate cuts going forward. So that's something to watch. We'll be looking out for Fed Beige Book. On Thursday, we get European confidence survey. That is going to be interesting in terms of how the European growth outlook is looking. We get the second quarter GDP second update for the U.S. Again, interesting from an economic perspective. And then Friday, we round things up with the print for the euro area, CPI. Again, will be key to watch as the market starts to build on this view that the ECB may be looking to start cutting interest rates as soon as June, even though, as we heard a short while ago, the Bundesbank president, Joachim Nagel, seemed to push against that idea, saying that they can afford to wait until September. And then the main event for the week, I would say, is going to be the U.S. PCE. That is the Fed's preferred indicator for inflation. Now, also coming up, South Africa's election is just 3 days away. President Cyril Ramaphosa is urging people to vote as his ruling ANC party comes under pressure. We're live next in Cape Town. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. At least 35 Palestinians reported killed in an Israeli airstrike at a camp for displaced people in Rafah. That is despite the ICJ ruling ordering Israel to halt operations. South African President Cyril Ramaphosa urges citizens to vote as the nation gears up for its most hotly contested election in 3 decades. We're live in Cape Town for the latest. Plus, G7 finance chiefs blast China's trade practices and threaten tougher protections for their economies and critical industries. Well, hello again. Good morning. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, it is a bank holiday in the UK and US, so that may lead to slightly thinner trading volumes. But that being said, let's just get a quick market check on how some of the key markets are faring. We had a more positive handover from Wall Street on Friday. Investors cheered on by those lower than expected University of Michigan inflation expectations for the year. We saw NASDAQ and S&P close in the green. You can see that though S&P today is seen opening up slightly weaker to the tune of 7 basis points. Asia Pacific, MSCI actually in the green. We'll talk more about that with Avril in a moment. Brent down about 0.3, well, up this morning about 0.3%. Of course, we found out on Friday that that OPEC Plus meeting is moving to virtual. That's going to happen this next Sunday, though no one is expecting a change in output cuts. And then yen seeing a bit of a bid this morning, down 0.2% versus the USD. And that is due to some commentary that's come through from the Bank of Japan, Ueda, over the weekend, suggesting that they're really going to focus on getting inflation expectations back up to 2%. Now, our terminal chart this morning, we're taking a look at cross-market volatility. I thought it was interesting to note that it's not just VIX that's been dropping, sitting at just around 11% or a little bit higher, but other cross-market volatility has been dropping as well. You see it in the likes of bonds volatility, also sitting lower, as well as FX volatility. So despite a lot of the risks that we've been flagging on these shows, be they geopolitical, be they related to monetary policy, be they elections related, implied volatility on many of these cross assets is still at very, very low levels, so multi-year lows. And that's interesting because, as our prior guest was talking about, investors are not expecting a paradigm change despite many of those events. All right, let's check in also on how markets in Asia are faring now. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing that green in Asia stocks, that reversal from last week's performance, which saw its worst declines in about a month. This is really being spurred along by those renewed expectations of the path for the Fed's rate cuts this year. The TAIEX is leading the gains, the Taiwan benchmark, but it's pairing a bit of that from earlier in the session. A more muted performance in Chinese equities as well as in Japan. Let's flip the board because I want to take you to some of the commentary that we've gotten from BOJ officials today. As you alluded to here, we heard from Governor Ueda, flip the board if we can, but we're also hearing from his deputy, Uchida, and he says that the end of the battle for deflation is in sight. This seems to suggest more tightening ahead, and we're seeing bonds, the selling is coming through. Look at the yield on the 10-year, still above that 1% level. With these comments, you would think that we see perhaps a bigger reaction in dollar yen. There is that recovery today, moving closer towards that 156.5 level. But note here as well, we're seeing thin trading volumes given the U.S. holiday. Jumana.
Avril, thank you so much for the overview. Now let's turn to South Africa. Apartheid ended 30 years ago, but extreme inequality and poverty persist, casting a shadow over the election. Bloomberg's Tom Gibson takes a look at why the country remains divided along racial lines.
So South Africa is the world's most unequal society.
Around informal settlements, there is no electricity there. Sanitation, it's not that good. There are times there's no water.
You could throw a stone and it would land in one of the highest concentration of wealth areas in the country. On this side, you have one of the darkest, scariest informal settlements and townships in this country. About 10% of the population, which is oftentimes white, owning the range of 80% of the country's wealth.
This was Soweto.
It's been 30 years since the end of apartheid, the structural system of racial segregation that nearly ripped South Africa apart.
We are going forward. The march towards freedom and justice is irreversible.
But for many black South Africans, the story of optimism and renewal associated with Nelson Mandela's coming to power has not materialized. 30 million people, well over half the population, is still living in poverty.
A lot of the failures in transforming this country have often been placed at the feet of the ANC.
The end of apartheid started something special, but it hasn't fully delivered, and that's left ordinary South Africans torn. On the one hand, thankful, having known the horror of life before, but on the other, frustrated with what might and should have been.
That was Bloomberg's Tom Gibson reporting on South Africa's racial divisions. Also coming up on our show, G7 finance ministers have been meeting in Italy with some strong language against China. We're live to Stresa next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, G7 finance chiefs have blasted Chinese trade practices and threatened further escalation after President Biden's administration moved to reimpose tariffs. Their joint communique published after meetings in Italy accuses China of hurting the economies of its trade partners. Now, joining us now is Bloomberg's Oliver Kirk, who was in Stresa for those talks and had a very busy weekend interviewing so many people on the sidelines of this G7, Oliver. But I think what really stands out to the market here is some of the harsher words that have come out of the communique specifically directed at China.
That's right, Jumana. I mean, in the weeks leading up to this, we didn't really expect there to be China as a sort of formal part of this, the discussions here. But really, those Biden tariffs came in just before the meeting out there. And so as a consequence, you know, the leaders and Janet Yellen made a very, very big show of the fact that they needed to show some unity on the subject of China, which is obviously a contentious issue within the G7. For, on the one hand, many members of which have really made a lot of their money and a lot of their economies are based on the sort of exporting and having that good relationship with China, like the Germans and potentially the United Kingdom, that really stood out with the others, saying that really we need to not sort of feed that protectionist impulse.
Our general view is that it is really important that the world does not unintentionally creep back into protectionism. So our starting point is that we really think hard before imposing tariffs or trade remedies.
So there you have Jeremy Hunt really basically pushing back against some of the things that we were hearing from the G7 finance minister, saying that really we need to be very cautious about how protectionistic we get vis-a-vis China, where, of course, many of the other leaders and finance ministers were saying that really this is a major issue that we need to deal with.
Oliver, thank you so much. Oliver did speak to plenty of people over the course of the weekend, and it wasn't just about China protectionism, one of the themes that came up. Another big theme that we had been previewing towards the end of last week was the approach to those frozen Russian assets. There have been a lot of talks with these G7 finance ministers about how to translate those frozen Russian financial assets into assistance for Ukraine, and it looks as though they have made a little bit of progress in that space as well. We're going to link back to Oliver later on in the show when there are fewer technical difficulties. But for now, coming up, we're going to discuss turbulence over Turkey after 12 people suffer injuries on board a Qatar Airways flight. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, South African President Cyril Ramaphosa is urging citizens to vote in Wednesday's election. His ruling ANC party risks losing its parliamentary majority for the first time since the end of apartheid in 1994. Pravin Gordhan, the Public Enterprises Minister, says his party will come out on top.
The ANC still, I think, represents the best interest of virtually all South Africans, that it would climb the wave, so to speak, of optimism and come out above 50%. And once again, be given an opportunity to continue to build democracy in this country, to build our economy, and to ensure that the inequality and the divisions in our society are attended to in the ANC way.
That was Pravin Gordhan speaking to Bloomberg's Jennifer Zawazaja, who joins us now from Cape Town with a guest. Jen.
Yeah, Jumana, good morning to you. I have Beverley Schafer here. She is the former Deputy Speaker of the Western Cape Provincial Parliament. She's standing here with me. Beverley, thank you so much for being here on a cold and slightly dark Cape Town. Listen, Western Cape is looking to be one of those provinces that could be a deciding factor in this election. What is your expectation for the outcome in the Cape in specific?
Well, we're certainly hoping to pip it really at a majority vote, so post, 50%, 52%. We've done an incredible amount of work here, or let's say the Western Cape ruling party has done a credible amount of work here.
Which is the Democratic
Alliance. And I would think that the most concerning thing would be if we lose the vote, we certainly would change the whole fabric of the Western Cape, and that would be very much a concern.
What would that mean? What does that look like? Because for people who are not sitting here in Cape Town is known as a very stable part of the country. The DA, this is the only province that the DA really rules. So then what could that potentially look like in your opinion?
Well, the most important thing is governance. So for the last number of years, we've had very good governance, both at a city level as well as at a provincial level. Without good governance, you don't get, foreign direct investment. We've just got Amazon that's opened up here. That all is as a result of good governance, and that's a very, very important factor.
Well, then, we had a survey of investors, and the favorable outcome among investors is the ANC staying in the majority. I mean, what does that tell you then about the DA strategy? Is it not working potentially for investors?
No, I definitely think it does. I definitely think it does. I would actually question whether the ANC creates a sentiment of trust in the private sector. They're not private sector friendly per se. All three of the economics ministers are COSATU or trade unionists. Their ideology leans towards the East, although they do understand that the West is where the trade comes from. But the point is that the Democratic Alliance ideology is very much pro-business.
So then what would a coalition look like? Because that could potentially be what shapes up in this election between the Democratic Alliance and the ANC.
Are you talking at the national level?
At the national level, yes.
Well, that would be quite a shift for us to partner with the ANC. Obviously, it's something that the leadership would have to decide on. But I think in the end of the day, the scenario between the ANC and the EFF is far worse an outcome than any other partnership that may go ahead.
Right. The DA, I think John Steenhuisen called it the doomsday scenario. But if we see, the Western Cape being ruled by the DA, working here on a provincial level, I mean, could that not then translate to the national level?
It definitely could. The point is, we've had so much corruption at a national level. Do you want to partner with corrupt partners? Really, it's going to have to be an overall shift of cabinet ministers that are ethical and are focused on fixing up the country rather than actually living off the resources.
So then what is your expectation on the national level? We started with the Western Cape.
So we've got the Moonshot Pact, which has really been a stretch target. I still imagine that the ANC will possibly pip everybody to the final line, meaning perhaps 48-49%. If they do so, then they'll partner up with a very small party just to fill the 1% vote for a majority that they will do. They've done that before. They've done that with Good Party and Patricia de Lille, the former mayor of Cape Town. They can easily do that again. What you really want to do to have change in South Africa is to be able to push the ANC way down, closer to 40%, where they have to look at the bigger parties in the coalition Moonshot Pact to actually take the government forward.
But that's not your expectation?
I think it's a tough one. Voters wake up on the morning and decide how they feel. And we're still a very young democracy. It is not set in stone. You have about 3 million swing voters that move from one poll to another or one election to another, sometimes wake up in the morning and say they're not voting. That's their form of protest, and we're not sure what's going to happen at this one on Wednesday.
What will be the determining factor then, would you say? Because we talk a lot about the issues that South Africa is dealing with, right? But if you're saying they wake up on Wednesday, May 29th, and they're voting then, what is it that you expect voters to turn out for?
I think there's a lot of disillusionment. There's a lot of upset. There's no hope. And when you can't sell hope, and you can't pull those, the wool over the voters' eyes anymore. That's very much gone. Yeah, you still have perhaps in the rural areas that traditional vote carrying through, but not in the city anymore. There's far more expectation for government to be supporting people, and they're not. Everything from social grants is even failing. The only reason we know that the electricity has been pushed to keep on is because we know there's a direct, correlation between the electricity and people's cell phones. And if you can't get, can't charge your phone, I can tell you that creates anger in this country.
So then, Beverley, priority number one for this next administration that comes in, what is it that they should be tackling?
firstly, to stop the corruption, stop the leakage of resources that need to go out back into South Africa, fix up the infrastructure, focus on maintenance. We know that there's been so many years of lack of maintenance, and as a result, infrastructure is failing. You really have to focus on energy. Without energy, we really can't grow the economy, and if we can't grow the economy, 35 million people plus that live on 1,000 Rand a day will remain there. And that is the tragedy of South Africa if we don't change the direction now.
So energy, number one, when it comes to turning this economy around.
Yeah.
And the expectation then that could potentially happen with the ANC and a smaller party, or potentially the DA?
Well, it could, I wouldn't be able to take on that decision whether it's going to be the DA or not, but it certainly would be, I would think, to be with a party that actually knows how to govern. The ANC, unfortunately, doesn't have a good track record of governance, but the DA does. And the Auditor General and even the President has recognized that publicly, that the DA really does have a very good governance record.
All right, we have to leave it there. Beverley Schafer here with us. Jumana, I'm going to send it back to you.
Fascinating, Jennifer. Really interesting to hear the insights from a former politician as well. That was my co-anchor, Jennifer Zawazaja, who's going to be live every day in Cape Town this week in the run-up to those elections. Now, a Qatar Airways flight has hit severe turbulence over Turkey, injuring 12 people. The Boeing 787 landed safely as scheduled in Dublin, but last week, a Singapore Airlines flight made an emergency landing in Bangkok after severe turbulence killed one passenger and injured dozens of others. Bloomberg's aviation reporter Danny Lee joins me now from Hong Kong. Danny, pretty alarming that two such turbulence incidents have happened in the course of the last couple of weeks. What exactly has happened, and what do we know about this latest incident that occurred on the Qatar Airways flight?
Yeah, another bout of turbulence and more injuries, but this time on a Qatar Airways flight from Doha to Dublin. Of course, this incident happened over Turkey. The plane was okay enough to fly onwards to its final destination. Qatar Airways say, though, that the 12 passengers and crew who were injured suffered from what they say is minor injuries. But, with these kind of incidents frequently being highlighted taking place, it just highlights the need for passengers ultimately to be wearing their seatbelts, because it's a rule that is not mandatory when you are flying. And of course, with what happened last week with a Singapore Airlines jet where one person died and several dozen people were injured, and people who suffered extensive injuries from paralysis to spinal and brain injuries, which people are still also being currently treated for in hospital in Bangkok because of that Singapore Air incident.
I mean, one of the takeaways for me after just watching these incidents the last couple of weeks is I'm not sure why I would ever take my seatbelt off sitting on a plane going forwards, but I'm curious to hear what some of the passengers on board that Qatar Airways flight had to say.
Yeah, there were some very colourful accounts of what had happened, and particularly from one of the passengers who spoke to the local broadcaster, RTE, had said was that, it felt like the plane was falling for several seconds. Food was flying around the cabin. Some of the people who observed having cuts, one of the crew on board was in a sling afterwards. Now, it is ultimately very important that people do wear their seatbelts at all times. That's what the airlines advise. But it doesn't seem like there's an appetite for necessarily change to make seatbelt wearing a mandatory rule, and it's very difficult at a global airliner level to get any kind of aviation safety change done very quickly. It sometimes takes years, even a decade or more. And it's actually going to be one of the topics that is probably going to be talked about a little bit in Dubai actually over the weekend when the global aviation industry actually gather for their annual meetings. So it's going to be very interesting to hear what airline CEOs have to say. But for now, in this Qatar Airways incident, the airlines say it is conducting an internal investigation.
Yeah, pretty alarming, nevertheless. Bloomberg's aviation reporter, Danny Lee, thank you. Now for a look at some other stories we're following this morning. Asia's richest man, Mukesh Ambani, is setting his sights on Africa with a new telecoms venture. A unit of Ambani's Reliance Industries will provide key network infrastructure, applications, and smartphones for Ghana-based NetGen Infraco. The company is planning to provide 5G broadband services to mobile operators and ISPs by the end of this year. Luxury sneaker brand Golden Goose is said to be planning an IPO in Milan as soon as this week. Sources tell us that investors are expected to value the shoemaker at about 11 times this year's estimated earnings. Golden Goose would join CVC Capital Partners and Spain's Puig brands in moving ahead with listing plans in Europe. And a wrap-up of some of the key markets that we've been following today. A quick reminder that US and UK are closed for trading. This is the picture for some of the key equity indices. S&P futures seen slightly weaker, 6 basis points or so. NASDAQ around 8 basis points weaker, even though it ended on Friday up more than 1%. Dow Jones also trading sideways, and Euro stocks also seen dipping a little bit. Of course, the main event for the week is going to be that PCE indicator coming out on Friday, with a bunch of other events in the middle of the week, including the Beige Book and CPI numbers in the Eurozone. A quick look at other cross assets as well. And here we're keeping a close eye on what's been happening with oil. Remember, on Friday, we found out that the OPEC Plus meeting is moving to virtual on Sunday. Even with that news, we are seeing the energy complex trade a little firmer this morning. But that's Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. I'll be anchoring that as well. This is Bloomberg.